What's up everyone, it's your boy Heavy, and today I want to talk about a controversial topic in the Bitcoin community, the stock-to-flow model. Many creators and influential figures in the space have strong feelings about stock-to-flow, and this creates a rather interesting situation. After watching this video, you will know what the stock-to-flow model is, what it does, who made it, how it came to be, why some people agree with it, why some people think it's bogus, what I think of it, and what it means for the future price of Bitcoin. We have a lot to cover, so let's get to work. First, let's talk about what stock-to-flow is. Stock-to-flow is a price prediction model used to estimate the future price of scarce assets. It is based on the fundamental assumption that scarcity drives value. Scarce assets are anything of value that have a finite supply or are very difficult to produce more of. For example, gold is scarce because to get more of it, you have to dig a hole in the ground and mine it. Even though there is a lot of gold still in the ground, it is hard and expensive to get it out. On the other hand, US dollars are not scarce. To get more dollars, the Federal Reserve simply types in the desired amount to be printed and clicks entered. Cue Jerome Powell money printer goes brrr memes. Bitcoin is considered a scarce asset because it has a limited supply and has to be mined by processing blocks and running a hash algorithm. In recent years, Bitcoin has become extremely expensive and difficult to mine. It is now 16.7 trillion times harder to mine one block than it was 10 years ago. Hence, you can apply stock-to-flow. The stock-to-flow factors in two basic components of a scarce asset: existing supply, which is the stuff that has already been mined, and new supply, the amount being mined every year. Stock-to-flow is defined as the ratio of the current stock of a commodity and the flow of new production. Calculating the stock-to-flow ratio is very easy. You simply take the existing supply and divide it by yearly production. Currently, there are 18.63 million Bitcoins, and the yearly supply is about 328,500. This gives Bitcoin a stock-to-flow of about 56. For reference, gold is about 62 and silver 22. In the case of Bitcoin, stock-to-flow will continue to increase dramatically because the flow of new production is cut in half every 210,000 blocks, or about every 4 years. This is known as halving, and fans of stock-to-flow point to these halving events as being a major driver of Bitcoin price growth. Now that we have spoken about what stock-to-flow is, let's go over how it came to be. In March 2019, an anonymous person using the alias Plan B posted an article on Medium about a stock-to-flow model he made for Bitcoin. Plan B is allegedly a Dutch money manager that helps oversee a $100 billion balance sheet. His Twitter handle, 100 trillion USD, is a tribute to the $100 trillion Zimbabwe note from 2008 during a period of hyperinflation. Plan B's article cites a passage from the Bitcoin Standard about how scarce commodities with high stock-to-flow are price inelastic, using gold as an example. Basically, it makes the point that if gold sees an explosion in price, supply will not increase enough to bring the price back down. Thus, supply cannot keep up with demand, so price goes up. Later, the article states that Bitcoin will have the highest stock-to-flow of any scarce commodity by the year 2022. This concept is used as evidence to claim that the stock-to-flow model accurately predicts the future price of Bitcoin. But how does the math actually work? Plan B took price data and the stock-to-flow ratio for every month between 2010 and 2019. That data was then plotted on a chart, and a linear regression was performed to find the slope using y equals mx plus b. The line is then extended into the future to predict future prices based on past data. Since the model debuted 2 years ago, the Bitcoin price chart has remained on the trajectory predicted. If the trend continues, how high does it think Bitcoin will go? Next, we will cover where Bitcoin could run during this market cycle. The stock-to-flow model by Plan B has 2 iterations. The first iteration predicts a price of 100,000 before the next halving. However, he modified the model to compare past phases of Bitcoin with gold and silver to create a stock-to-flow cross-asset model. The main difference is that the new iteration removed time from the equation. Instead of comparing price to time, it compared price to the stock-to-flow ratio. This way, gold and silver could be included. After these changes, the model now predicts Bitcoin will hit a peak of 288,000 before 2024. This is assuming 19 million Bitcoins and a stock-to-flow of 56. It says that after every halving, the stock-to-flow ratio doubles, and this causes market value to increase tenfold. This chart shows where we are right now. You can see the pattern is following the line pretty well. If we look at this chart, we can see that the price is actually ahead of schedule right now relative to the 2017 bull run. It will be very interesting to see where the trend goes over the next 2 years. A continuation of the current pattern would be extremely bullish and lucrative for Bitcoin investors. These price predictions are remarkably bold and have a polarizing effect on those familiar with it. So let's now touch on why some people choose to agree with the findings and some don't. The stock-to-flow model has believers and skeptics. Some agree with it because it has accurately predicted price growth so far. Plan B provides statistical data to show a significant relationship between scarcity and the value of Bitcoin. His chart has an R-squared value of 95, which means the probability of the relationship existing purely by chance is very low. Additionally, he points to gold and silver as evidence this model is accurate. He also justifies these predictions by saying the goal is not to predict specific prices, but rather to predict average price levels. Not everyone agrees with him, though. Vitalik Buterin, co-creator of Ethereum, argues that it is a sham. His reason is that the theory can't be proven or disproven. In a tweet, he calls it unfalsifiable and says that, quote, was the peak before the halving, then it rose in anticipation. During, because of the halving. After, because of ... Plan B responds that the stock-to-flow model is more about average price levels rather than peaks. People are also reluctant to take it seriously because the model predicts the price of Bitcoin will soar into the billions by the 2040s. Additionally, the model assumes that with certainty, we know where the price is going. Although we know there are a number of things that could get in the way of Bitcoin price growth, not the least of which being massive government crackdowns. The other problem is that Plan B uses stock-to-flow for gold and silver to back up his point and provide evidence to the accuracy of his model. However, Nico Cordero points to a chart showing gold's market cap has ranged from 10 billion to over 9 trillion while maintaining a stock-to-flow of around 60. A look at the scatter plot shows no discernible connection. Another issue is that the stock-to-flow prediction is denominated in US dollars, but the value of a dollar is a variable not accounted for. For example, if the US dollar suddenly lost most of its value, the Bitcoin USD price would skyrocket without the stock-to-flow ratio actually changing. Furthermore, this model predicts that the price will eventually go to infinity, since there will come a day when there are no Bitcoins left to mine. Once the last Bitcoin is mined in 2140, the numerator will theoretically be 21 million with a denominator of 0. Lastly, this model completely disregards the demand side of Bitcoin. Many people see demand as the most important driver in the price of Bitcoin, and it is not accounted for at all in this model. All of these are valid points. And the final topic we will discuss today is what I think about stock-to-flow. Now, I am not well versed in how accurate some financial models are over others, and it's important to remember that all models are wrong, but some are useful. That being said, as a Bitcoin bull that would love to see the price continue its rally, I think the model looks great. However, I am definitely skeptical and tend to err on the side of caution. By no means would I make an investment decision based on this model alone, although I like the premise and I like that many people believe in stock-to-flow. In economics, expectations often drive new price discovery. The term buy the rumor, sell the news says exactly that. I think if people expect Bitcoin to hit 288K, that will give it some serious tailwinds because those are the type of people that will keep buying when Bitcoin is over 200K and beyond. The prediction could effectively become a self-fulfilling prophecy. Do I think it will hit 288K this cycle? Honestly, I'm not sure. But I am more confident that it will be 288K than 2.88K. So for that reason, I am holding my coins for the long term and actually buying more. There's no doubt that Bitcoin supply is shrinking and demand is increasing. Trading volume and institutional involvement are at all-time highs. Existing stock is shrinking as people lose their private keys, and mainstream adoption, acceptance, and visibility continue to increase every day. It is no wonder why we see new highs every month. The most important thing for Bitcoin right now is to stay relevant and keep making new highs so new investors and money will be drawn in. To recap everything we just talked about, stock to flow is the ratio between existing stock and new stock. It is supposed to predict future price levels, was created in March of 2019 by a Dutch money manager, says Bitcoin could be 288K before 2024. Some people agree with it, many do not, and I'm not sure what to think, but hope it will help Bitcoin run over 6 figures. I hope you all learned something from this. If you did, hit the like. If you have questions or if I missed anything, please comment down below. This has been Heavy, and I will see you in the next one.